So, welcome to Cymax FinTech Market Insight Part 3, and this is the macro outlook. As usual, disclaimer, trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. Now, just be aware of leverage because you can lose substantially more than that initial investment that you make. Everything that's included in these is just purely for educational purposes. We are not trying to encourage you to trade or invest. That has to be your decision. And before you make that decision, carefully consider the risks involved, your financial situation, your level of experience and risk appetite. And of course, you should only risk capital you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you risk your capital. Please, that last bit is so important. Until you understand trading, do not try and trade live. Practice, practice, practice with a demo. Okay, so moving on to the macro outlook. Of course, there's still a lot of focus on the banking sector. Now, the macro outlook has become a little bit blurred because of that. What's going on with the banking industry, these casualties have come sort of 3.5 banks almost gone, and more having to be done by other banks to prevent the other two banks from actually collapsing as well. Now, central banks remain focused more on inflation and price stability. They've sort of really emphasised, especially in this last week with all the rate increases, that is their number one priority. Although to be honest, in reality, the banking crisis has been pretty isolated so far. Hopefully, it's not going to grow. Deutsche Bank could be the defining factor there. Now, data-wise, we still see inflation is way too high. And I'm sure that must be frustrating the central banks. A couple of points I'd like to make here really are that the central banks, they're just not allowing enough time for the rate increases they've done to sort of filter into the economy and for the economy to reflect them, or for them actually to be seen in the data. And of course, the actions that they've taken can really take several months to show up properly in the data. Now, the other point I'd like to make is that, and I go on about this, is that companies are boosting their profit margins, and that's by not passing on any savings to the consumers. And as I keep highlighting, most certainly in the food sector. We all need to eat, so they're getting away with it at the moment, which again, it's keeping that inflation higher than perhaps it should be. When you look at the way the price of a lot of the raw materials have come down, including energy, food inflation, I would say, is the biggest issue. Again, service sector as well, because of having to pay higher salaries, could be another one, I guess. So with the banking sector being in a little bit of a crisis, it's probably increased the chances of a recession over recent weeks. Again, we're just going to have to see if there's any more first, or whether that was it. Now, Russia continues to sort of beat its war drum. It's looking to conscript more soldiers. It's moving or going to move nuclear weapons towards borders. And they are supposedly preparing for a new ground assault. That is providing, of course, that they can find the soldiers, the equipment, and of course the weapons to actually make those advances. Now, I just touched on energy, and energy prices continue to remain under a bit of pressure, really. I mean, WTI last week traded below $65 at one stage, before it rallied back up to around 71. And part of that is going to be recession fears, and there seems to be plenty of supply around, and of course, I think one of the major impactors has been also the fact that Europe's weather has been seasonally warmer than it could have been for sure, or it usually is. But if it had been a severe winter, I would say that Europe would have been in recession by now. But this weather has really saved them. Now, many are expecting the Fed to cut rates this year. I just don't see it. I really doubt that, unless a major crisis sort of erupts, around banking or something else that we haven't even seen yet. But for me, inflation is still way too high, and that means for me that these central banks are going to need to keep rates higher for longer. I, I just really can't see it this year. Again, just remember this is my sort of personal view. Now, that said, when you look at the short-term interest rates, the Eurodollar ones, based on the US, they're pricing in around 4% for December. September's pricing in around 4.5%. And yet, we're still seeing, and they're still threatening to put rates higher. So, that's going to be an interesting one. I just think there's some mispricing there around those. I traded those stars for 20 years. So I would listen out for any more rumours on Deutsche Bank for sure. And again, this coming Friday, we've got the Fed's favoured inflation data of the PCE. Now, I'm throwing more doubt on data. And the reason for that, not all of it, of course, but the surveys that they send out. These are the ones that I sort of are questioning more. And the reason for that is they only seem to be getting anywhere between sort of 30 and 50 something percent responses. So, how accurate can that be? And we're trading and we're assessing economies based on a lot of this data. So, it's just something just to have that little sort of doubt in your mind. Anyway, that's it for the macro outlook this week. Not too much, but again, we just got to keep an eye on the same things: inflation, rates, and of course, we're going to get more central bankers speaking. Lagarde speaking twice, and then also just keep an eye on the banking sector. We saw their stocks have a big crash, then a recovery. And then, with rumours of what's going on with Deutsche Bank or potentially going on with Deutsche Bank, who knows what's going on there yet. But, just sort of just listen, just make sure you're listening to you've got some sort of news service coming through to you, or Squawk or something. So, anyway, that's it. So now we're just going to move on to the technical analysis I do each week in part 4. As usual, just a reminder of some of the services that we provide to help traders. Obviously, it's why we do this, is to help you prepare for next week. And then we also include to our subscribers daily newsletter. That includes fresh chart levels each day, fresh pivot points, breakout levels. I had people contacting me on Friday saying that they did well using one of those breakout levels. So fantastic, well done. Now, if you want to sort of improve on your knowledge in some areas, we do one-day workshops just to help you fill in those gaps. 1 week courses, that can really sort of help you build those foundations, strong foundations to turn trading into a career. And then if you're really serious about trading, then we've got our comprehensive masterclass. This has been designed especially to provide you with all the knowledge and trading tools, that are going to be required to navigate today's markets. And that's on any asset class as well, which is really important, because you never know what's right for you. Just trading something just because you've got access to it doesn't mean it's the best opportunity, the best thing for you. You've got to try all the asset classes, but of course, do that in demo mode. Be safe while you're experimenting. And of course, we're providing courses every day of the year. So then, just sort of reach out. There's our calendar. If you need specific dates, sometimes we can juggle them around or add extra ones in. Trader mentoring, again, that we try and help individuals to get to that next level time and again. We consult to companies to help them with their hedging for foreign exchange and commodity exposure, trading educational content to individuals, exchanges, brokers, everything all round. We do lots of webinars even just to sort of constantly keep traders up to date with what's going on. And then, of course, if you're lacking that capital to get into trading, and that's the only thing that's holding you back, then you can look to qualify for a funded account through our partner Nordic Funder, and there's a link to that for you to use. You never know, they may even offer you a discount. Any questions or anything, contact us, info@cymaxfintech.com. Any trading questions you'd like to ask me personally, then it's chris.tubby@cymax-int.com. That only leaves me to say I wish you a great trading week, a great week in general, actually, and just be lucky.